Alright, so we'll start off with a little bit of review. We kind of just did this last week, or just right now. But we'll review candles from last week. So there's candles. Candles, it shows the price in a certain time period. So each candle represents a time period. It could be 1 minute, 5 minutes, 15 minutes, 1 hour, 4 hour, 1 day. Those are the most common times. Here we labeled the parts of the candle. This is the close, the open, low, and the high. Meaning, say, if it was a 1 minute candle, at the start of the 1 minute, the price is right here. Hit the high up there, the lowest in that 1 minute, and then this was the end of that 1 minute, right? You notice there's red and green ones. I didn't explain this last week, but the red one just means like the price closed, it ended at that time period lower than it opened at. And then the green one just meant it was higher than it opened at. So, you'll see red and green, but also we don't have colors. Like, we'll just do open and then shaded. So this, if this is shaded, this is just equivalent to that, where the price closed lower than it opened. Alright, so today we'll be learning, we learned how to read these last week. Today we'll learn kind of what they mean. So it's really how to describe reading candles. It's kind of reading price action, where price action, the definition is the movement of a stock security price plotted over time. So it's like saying what the stock price is doing over time. This is the basis for all technical analysis, where looking at charts, this is the very basic. You need to know this to be able to analyze a stock technically. You're just interpreting what the candles mean, really. So if we, the very basics of price action, it's kind of just like if you have a candle with a really big body and a small wick, it kind of means like the momentum is strong, versus if you have like a candle like that, this is like the momentum is kind of weak. The explanation for this is like, let's say the stock opened here, I'll put O for open, and then it closed up here, right? It just means, and the high and the low is down here, up here. It just means like all the way till the close of the candle, the price kept moving upwards. A lot of momentum. This one, the candle, if the stock opened up here, closed up here, this is the low and high, right? Opened up here, comes all the way down here, and then ends up somewhere in between. The stock, the price didn't fluctuate that much, or it fluctuated a lot in that 1 minute, but it didn't end up doing anything. It only moved up this small amount compared to this amount, where, so that the smaller candles just mean, whoops, my bad. The smaller candles just mean less momentum. So a lot of the time, if we have a candle, a really small body or no body, it's called a doji candle, where the price opens and closes at one point, at around the same price. You can see that the stock opens here, went all the way down here, went all the way up here, and then back here. It shows, really kind of just shows no momentum in the price, and it kind of means like an indecision in the price. So it's, the price is indecisive on which direction it wants to move. And also, like, it could signal like the stock is just trading flat, or it could signal like a reversal, where if the stock was coming up, see a doji candle, it's like indecisive up here, could potentially mean a move downwards. Okay, so if we take a look at this chart, right? I labeled out the parts of the red candles is the flat, the small body candles or doji candles, and this the part where I put yellow arrows is I'm labeling arrows that, or candles that increased in size. So if you look at right here, this part, the first red circle, there's a lot of doji candles, small bodies, not really a clear direction in the price. Same thing with the second one down here, it's not much of a clear direction. But if you start seeing these two candles, some bigger candles, it just means more momentum, right? And these candles are traveling upwards, meaning momentum is going upwards. And we can just see that the price traveled with the momentum upwards to the high. And then, if we see up here, earlier I mentioned that doji candles could represent reversals. So if the price moved all the way up here, and then you see a lot of small body or doji candles, you can like kind of interpret the stock is losing momentum, and then eventually probably heads back down, right? And then if you see this candle, It's a bigger candle compared to the other ones, meaning momentum is gaining to the downwards direction. Eventually you see the stock drop, and the last yellow arrow shows another like bigger bodied candle. That just signifies that the momentum is gaining, and in this case is moving upwards. You can see that reflected in the stock price in the next few bars. Okay, so we'll take a look at a few candle types. Just remember that since we don't have color, I'm just going to label green candles as hollow and then red candles as shaded. Where in a green candle, this is the open, this is the close. Red candle, this is the open, this is the close. So if we take a look at bullish candles where price is expected to increase, we have obviously the most common one. The one that first comes to mind. Really big candle, green candle. The body is big. Opens right here, close up here. It kept traveling up the whole way throughout the time frame, say if it was 1 minute or 5 minutes. Next, we have a candle kind of looking like that. Okay, this is kind of like a bottoming tail, where the price opened up here, it traveled all the way down here, but then nearing the end of the time frame and the end of the candle, starts traveling back up again. This is bullish. Price dropped at first, but eventually it was able to climb back up. And then, if we take a look at this candle, it's kind of the same thing, but this one's like a red candle. So could someone explain, or like, could someone tell me the story of this candle right here?
It opened up and then it closed and crashed at the bottom.
Could you repeat that? I couldn't really hear.
So like, where it says to close, at the bottom, and then the open would be at the top.
So you're saying the close is right here,
Yeah.
and then the open is right here?
Yeah.
Alright, well what is all of these bars, these two lines between me?
It shows like where the stock went up and down.
Yeah, so at first glance you would think that this candle represents that the price is moving downwards. If you take a closer examination, you can see the stock opened up here, right? And then it closed lower. You would think that means the stock dropping, but actually it means that if you look at this wick right here, it traveled all the way down. So if it opened at the high, or opened near the high, it traveled all the way down to the low, but was starting to climb back up. This still signifies like an upwards direction. And then, of course, we have the doji candle. Price is kind of indecisive at this point. There's no momentum. And if you look at the bearish candles, we have the most obvious one, where it's shaded, so it kind of just means it's red. And then we have the opposite. We have the opposite too, right? These are called bottoming tails, where the tail comes all the way to the bottom. These are called topping tails, where the tail is at the top. So those two are kind of just like these candles, but in reverse, where the price opened up here, traveled to the high, closed over here. So if the price was able to travel all the way up, you're thinking, oh, it's probably going to head up. But then before the end of the candle, it dropped back down, meaning the momentum is still going downwards. Yeah, question?
What's the difference between a red and a green candle?
Oh, okay, so a red and green candle is labeled up here, right? So we have, this is a green candle where at the start of, say, if this was a 5-minute candle, right? So it's 5 minutes. So it's a 5-minute candle. It just means in this candle at the start of the 5 minutes, the price was open right here. Start of 5 minutes, that's the price. End of the 5 minutes, the price was up here to close, okay? So that's a green candle. A red one is just that one in reverse, where the price at the end of the time frame was lower than at the beginning.
Alright, thank you.
Any other questions? Nope, okay. Alright, so, we could take a look at this setup right here. It's kind of like reviewing what we did on the last slide, where you see price traveling all the way down, and then you see a big bottoming tail right there, right? If you look at this chart, it tells you what that candle really means. It means the price opened up here, closed up here, this was the low point, L for low. So it just means at the beginning of, and this is 5-minute candle, so at the beginning of the 5 minutes on that candle, That's where the price was labeled O. At the end was C. And then in between it traveled all the way down and it came back up again, meaning the potential direction is going upwards, where the momentum is traveling up because the price was able to go all the way down and rebound. Okay, so next we'll be kind of like talking about the basics of indicators. So what an indicator is, it's really just like, it kind of takes a lot of the information from a stock and puts it into one graph or line that makes it easy to read. And like, are they really useful? I mean, one by itself is not too useful, but if you combine it with price and candles, a few other indicators, it could be useful. Some people trade with them, most people trade with them, but some do not. It's kind of personal preference. So we'll take a look at the first indicator. It's called a moving average.
Okay, moving averages. So, like Michael said, it's an indicator that's used in technical analysis. There's two types of moving averages. One is simple and one is exponential. For simple, what they do is they get the average price of a number of bars, whichever number you set it as. It could be like 15 5-minute bars, or it could be like a large 100 4-hour bars. It really depends on your preference. But what it does is it takes its average and then it connects it to the average of the next time frame. So you see like a series of averages that you can follow. It kind of like, if you know in math, it's sort of like a line of best fit. Yeah, so which you can follow. Exponential is a little bit different. It's similar to simple moving averages, except for the fact that it takes into account the more recent bars. So it's like a weighted average. So sometimes, for example, it could be 15% on recent weighting or only 10% on past weighting. So if you see in these, the green, that is the weighted moving average, the exponential moving average. It follows the recent bars more closely. It touches the candles a little bit more closely rather than the simple moving average. And you can see that there's a big difference between, well, not big, but there's a difference between the two. So it's really just preference. So the way moving averages work is that they smooth out the price data by like providing you with the average, and it filters out like the short-term fluctuations in price, so it doesn't, so you're not like distracted by that or anything. What you can do with moving averages is you can get an idea of the price, where the price is moving, but moving averages are only based on past candles and trends. Like, you can't use a moving average to predict future trends like accurately and future prices. So like Michael said, you should not rely only on moving averages as your indicator. You should use like multiple indicators on top of each other, and sometimes it won't even help you. So what people tend to do, I don't have a picture, can I get a picture of what people tend to do, oh, okay, whatever, last name. Oh, whoops.
Here, I'll explain this part. Okay, I got it. Alright, so a lot of the time where people, they overlay two moving averages, like a faster moving one that takes into account like shorter time frame and a longer moving one. So a lot of people, they make trades off of the moving averages crossing over each other. So like, if the short term one crossed below the long term one, they would short. If they crossed above, they would buy long. So there's actually an indicator for this. I'll go over it next week, where it literally just gives you two moving averages and tells you the crossovers. But yeah, I'll explain that a little bit more next week.
Also, moving averages, like, it's an indicator. It can also help you like determine other indicators like support and resistance lines. So it can help you with that too.
Okay, so another really popular indicator is called the Relative Strength Index, or RSI for short. This indicator really just shows momentum, and in summary, it just measures the speed and magnitude of the price movements. If you're good at math, you can take a look at the two equations. It doesn't really make sense, but there's two steps. Those are the two steps. But you don't need to know this, the computer does it for you. So typically on an RSI indicator, you'll see two lines. one at the top, one at the bottom. This is the price, this is the indicator. And then you see a line, this line is kind of just like taking the past two equations, combining it, and making it into a chart. So there's upper bounds and lower bounds. The upper 70, the lower is 30. And if it reaches the upper line, it kind of just means the stock is like overbought, where the price increased too much in too short of amount of time, and it has a tendency to bounce down. And then if you take a look at the bottom, if it dips below 30, it kind of just means the stock dropped too fast, or too much in too short of amount of time, and it has a tendency to bounce up. So if you take a look at this, oversold, price later starts going up, and then at the right side, overbought, price goes down later on. However, this indicator is not perfect. So a lot of the time it produces false positives. You see in this section, it's kind of hard to see, but this, the first dotted yellow line, it shows that the price was really overbought, but then this stock kind of still kept moving up for a while. So if you wanted to short there, you would have lost money. Second one shows oversold, price dropped pretty fast, but the magnitude of the drop wasn't too big, but it just dropped significant amount in a short amount of time, causing the oversold reading. If you bought in right here, you still would have lost money. Stock kept dropping. This section as well shows overbought, but the stock kept continuing up. It's kind of like 50-50. Half the time this indicator works, half the time it doesn't. So you're going to want to combine this indicator with candles or volume or other indicators to kind of filter out the false positives. So here's a summary of indicators really. Indicators are only tools. You shouldn't base a trade off of a single indicator. They're just something to help you make your decision when trading. And you kind of don't want to use one single indicator by itself, because it could produce false signals, as we saw in the last slide. Instead, you want to use a combination of a few indicators as well as price. So up here we have these candles, right? We learned about these, most important. This line is support resistance line. We learned about that last week as well. Here we have two moving averages that we just learned about. And then here's a volume indicator, RSI. And then this indicator, I'll go over it a bit next week. It kind of relates to moving averages. So as you can see, that's my typical trading setup. You don't really want to just base a trade off of one indicator. I have a few, but you also don't want to like cram your chart with like 20 indicators, and you won't understand anything that's going on. Okay, so remember how on the RSI there's two bounds, the upper bound and the lower bound? Could anyone tell me what the name, what it's called when the stock drops below the lower bound? Yeah. Oversold, yes. Just means like, if you just take a look at the word, you kind of understand oversold, sold too much. Drop too much in too short amount of time has a tendency to bounce up. So, I don't think we'll have time to check our portfolio this week, but I'll let you guys know on email. We're kind of down because Intel had pretty bad, well, it had good earnings, but everyone just decided to sell.
Oh man.
So Intel dropped around 10%, we lost like $5. We still have plenty of cash to buy. So, yeah. Okay, so that kind of concludes our meeting for today. If you didn't sign in with me earlier, please come see me. If you guys want to follow the Instagram and the Discord,